No matter where you look, Sofi, Upstart, Lending Club, no matter where you look, PayPal, Square, everything is bleeding. Some more than the others. And the question we often ask is, when can we see the recovery? Or actually, the better question I ask myself is, how 2022 is going to end for these fintechs that we are so heavily invested in? Especially with the recent PayPal earning and the 2022 guidance they provided, we are seeing some massive movement in the fintech industry. Now, this is a video where I'm not going to recommend any stock or any options, but this is a video where I will share what is going on with the industry and also where I think we are going to end 2022 for the fintechs in general. So let me start this video with PayPal earnings and also some red flags that I see in the earnings, along with few things that are going to be very interesting. So let me share my screen and let's get into the earnings right away. So this is a PayPal earnings transcript and I highlighted few major points that I'm going to discuss in this video. Now, some of the points are of course red flags for the industry, but some of the points are also very, very important to kind of gauge where this industry is headed in 2022. So this is the first point that I would like to discuss, is that we added right here, we added 49 million net active accounts to exit the year with 426 million active accounts, including 34 million merchants accounts. Now, this is a story of 2021. 2022 for this company is looking completely different, and that is why it's a major red flag for me. And in the last 2 years, we added 122 million net new active accounts. Very interesting point. I'm going to underline this here because we are going to talk about this particular point as we go forward in the next few slides. Okay, and then they're talking about, and despite that spike in new accounts, our transaction per active grew to 45 this year, an 11% increase. Okay, great. This is good news. All right. Now, next, they're talking about how supply chain issues have affected them, especially small business merchants right here. And then inflationary pressures impacted spending within certain segments of our user base. Everybody is affected by inflationary measures or pressures. Okay, next they're talking about eBay transaction will put an incremental $600 million of pressure on our top line, approximately 400 million in Q1 and 200 million in Q2 2022. Again, this is something that we have to watch out for as they come and give their projections for the rest of the year after the Q1 earning of 2022. Then they are talking about different things. This is nothing important. And then I'm going to actually bring your attention to this. For the quarter, our guidance contemplated generating about 12.9 million net new active on an organic base. We had a slower than expected finish of the year and came in below our target. The three factors that they're saying affected them is, first, more muted e-commerce growth, very, very important point for all other fintechs, driven by both supply chain challenges as well as pullback in spending by lower income consumers affected consumer growth. Second, in the back half of the quarter, we also changed course of our customer acquisition strategies, including incentive-led campaigns. That's one more thing that affected their user growth. Then, and lastly, most important thing for the quarter, there were certain accounts that we have disqualified or excluded from our net new active number. This is 4 point some million accounts that they're talking about, or 4.5 million account that they're talking about that was not created correctly or they couldn't include in the net new active accounts count. Now comes the big part. So we are evolving our customer acquisition and engagement strategy, and we now expect to add 15 million to 20 million net new active customer or customer accounts this year. This is the point that really made me think hard and fast on my holding of fintechs. This is bad news right here that I'm reading you. They are talking about that they are going to add 15 million to 20 million net new customer account this year. Previous or the last 2 years, take a look at this. Over the past 2 years, we have added more than 120 million customer accounts to our platform. So from 120 million to 20 million, just think about the drop. So they kind of 20 million in a year. This is 120 million in 2 years. So we are talking about 120 times 2. So we are talking about 60 million per year. And now they're talking about the top end of 20 million. So we are 1/3 of what they did in the previous year. This is not a good story right here. Again, take a look at this. To assess the effectiveness of these strategies, we look at the impact on customer behavior in the months that follow account creation, looking at the ROI or return on the investment spend. These programs are very successful in generating account creation, but overall, these customers have lower engagement and higher churn in a way. Okay, so this is of course not a good news for PayPal. Take a look at this right here. The impact of Omicron and the effect of inflationary prices combined with lack of stimulus is having an impact on spending and by extension our business. So people are spending less money and people are affected by Omicron. That means they are not really actively going out. That's where, most of the people, they spend money when they go out. This impact is most pronounced on our lower income cohort and has continued into the first quarter. Again, not a good news for PayPal. Based on our conservative stance today, we are starting the year with an expectation for revenue growth in the range of 15 to 17%. This is really low, and if a company like PayPal is asking or basically giving us this guidance, not a good news for fintechs as we head into 2022. Another important thing, our medium-term target simply did not contemplate inflation at a 40-year high and supply chain issues not seen in my lifetime. This is the CEO basically talking. As such, 2022 is now off to a slower start than we previously anticipated, and we are talking a more conservative stance of the year. So again, these fintech companies, they had a different game plan in mind for 2022 because the growth that they have seen in 2020, they thought it's going to continue in 2021, which it did. But then something happened in the later half of 2021 where people started to freak out because government stopped giving them free money. Now moving on, this is where I think there is a link for Sofi, and the reason why I'm saying Sofi, I'm going to explain in just one second. And what we have been able to see is that when we assess the strategy around trying to retain these very low engaged users versus attempting to move people up maybe from the medium engaged user to high engaged user group, the latter is much more effective. It is much more effective for us to focus on engagement, and I think it's right here important to note we are not a subscription model business where there's a direct relationship between our net new accounts and the amount of revenue. So this is where PayPal differentiates with Sofi, because I think that Sofi is going to win if you compare apple to apples in terms of PayPal. Of course, PayPal has amazing users, like there's so many users. Sofi is not even close, but Sofi relies on more revenue coming from per customer as compared to PayPal because of all the different services they offer. So this is, the user growth is not a good news for Sofi as well. I mean, if PayPal is having such a drastic drop, 1/3, I can't imagine what Sofi is going to come out and give their guidance for 2022. It's going to be scary what they're going to say. But I have a whole video coming on Sofi for 2022, so watch out for that. But this is PayPal, and PayPal, what I'm seeing is not really cool what's going on here. Okay, so now when PayPal announced their earnings, one of the main things that I focused was on the user growth. And for them to come out and say that we expect our user growth to be cut in third is really concerning, and overall concerning for other fintechs like Square, Affirm, and many others. Now let me share how the market is taking this news so far and where the money is flowing. This is really, really interesting, and you guys are going to simply love this chart. So make sure you subscribe to the channel, make sure you hit the like button, and for more in-depth conversation, join our Patreon and Discord. Links are in the description below. Okay, so now let me share my screen one more time with everyone here. So this is our chart for where the money is flowing in the ETFs. And this chart over here, and I'm gonna go in fintech in 1 second, but pay attention to what's going on here. Now, actually, before I do that, let me show you this. So this is value, this is growth. Look what happened. In December, we had a huge inflow in the growth stocks right here. And then we started to see the shift towards the end of the December, and also January was really horrible. And we saw the amount that came in the growth stocks in December go out of growth stocks in January. In February, we are seeing the money come back in. Now, given the fact that February only has just 2-3 days right now, so I'm not basing that, okay, February is going to be the time when everybody is going to come back in growth, but we are seeing that rotation now where people are actually coming and investing in the growth stocks. Value, look, value has grown like crazy in January of 2022 as compared to any previous months, as you can see. A lot more money came in the value companies. Still, as compared to growth, value is still higher. So there is no doubt in my mind that value is going to do well in February of 2022 as well, but we are seeing some money coming in growth as well. Now let me share what's going on with fintech as a whole. So this is fintech right here, and I'm going to actually mark it so you guys can pay attention right here. Okay, so this is fintech over here, and pay attention to this. And I actually did something different with the chart. So please comment below and let me know if these charts are better. And I think they're more clearer. I think so. Okay, so now see what's going on here. So Fintech has been actually dropping money since July of 2021. We see a negative number on Fintechs all the way through. And it really accelerated back in December and also in January when people started to take money out of Fintechs. They were really, really hot last year in the beginning, and then they continued the surge March, April, May. And then after that, every month and every time money is coming out of these Fintechs ETF, it's like a pattern. But look what happened here. In February, which is of course 2 days only, I'm not going to base the whole thing here, but you can see in February, we have some money come into the fintech sector after a massive sell-off the last 2 months. So December and January were a massive sell-off, and in February we have some money coming in. So fintechs so far are in positive. And to kind of give you this the whole thing over here, this is ARK's fintech ETF. And as you can see, we have money being pulled out since July right here continuously. And you can see just a single time when people invested money back in the ETF, and it was back in October of 2021. Other than that, every month people have been taking money out of the ETF, every month. So this is a huge news. But look what happened in February. In February, we have 2 days, which is February 1st and 2nd, where the money actually came into ARK's fintech ETF. This is really interesting. Then the other 2 days, 3rd and the 4th, the money actually went out a little bit. But if you see, it's very normal. It's not even the range. I mean, this is like lowest of all the withdrawals that we have seen. Like we had one withdrawal with this size over here, and then one withdrawal over here, and then now we have 2 withdrawals like this. But more money came in. This is the highest amount that it has come in since July. Look, there is no other graph which goes as high as this graph, which was on the 2nd of February. So I feel rotation is happening. But this rotation, can it live to its expectation? Can we see a huge, massive inflow of money in fintech? That is yet to be seen, because there are still many more companies that will report earnings in the coming days. And that'll be really interesting. PayPal earning actually scared me a bit about this sector, because when they are saying that their user growth is going to go down third, that's kind of a scary thought. Just think about it. PayPal, which is such a mature and a big company, is actually behaving like this or coming out and giving the projections, because I feel they're really scared because people are not spending money. People are not that very active. And that's the two really bad part for all fintechs, because their business is on members. And Sofi is a little bit different. I'm going to explain in just a second. But most other fintech, Square, Affirm, we are talking about all these fintechs. So this is a scary thought if you think about it, right? I mean, members are everything for these fintechs. And if the members are not spending money, they don't want stuff, they're not buying stuff, then why would they come and use companies like Square or Affirm? This is really scary of what's going on. I hope there's a market rotation, but that yet to be seen by the market and of course by us investors as well. So now let's talk about Sofi and the relationship here. So in my opinion, if bank charter was not in the play, then I definitely would have been worried, because supply chain issues, member growth, transaction revenue per customer, it all matters for fintechs. But the little saving grace we have in Sofi is that we now have access to cheaper capital, which will help somewhat. What I'm worried about a bit is the member growth, and that is something I will be really watching. How about we do a live stream on Sofi's earnings? Let me know in the comments if you guys would like that. But here's the real deal. The fact of the matter is that folks have lost interest in trading, in crypto, and overall market sentiment is very bearish. And the folks who use fintech are the folks who are involved in these type of activities as well. My YouTube revenue per video has gone down almost 35%. So you can imagine that people are not even watching YouTube videos. So you can imagine that all other services, which is YouTube is free, you guys don't pay anything. But if all other fintech services where the users have to pay, users have to use them for purchases, if the whole sentiment is down, these companies will not do good in 2022. Now we have less money, so we are spending less. And that is the problem for any of these lending businesses. That's why look what happened with Lending Club. So I'm going to talk about Sofi Q4 earning and the expectation around 3rd week of February, as we'll have more data from the market and also other fintechs like Lending Club, Square, to really plot and make sense of what's coming. So let me quickly share a chart with you for Sofi and what are the earning expectations. So this is Sofi's chart and previous 2 earnings that we have seen. Right now, they are talking about that average implied move is about 11.82% for SoFi after the earnings. And if you pay attention over here, the earnings in November when they came out, the stock moved about 12.49%. Then in August when their earnings came out, the stock actually went down 14.15%. From before was 1746 and after was 1499. Now they are talking about that the current implied move is about 11.58%. So they are expecting the stock to either move plus minus 11% or 12%, just ballpark 12% plus or minus. So I think doesn't matter what SoFi did in Q4 of 2021, does not matter. What they are going to come out and tell us that their expectation are for 2022 is what's going to matter, and it's what's going to move the stock. The stock has been down so much that doesn't matter if the stock moves up or down, 12% move is not going to be much because the stock is already down so much. What if like a stock goes down $1 or up $1? How is that going to affect us? Stock needs to move really, really high. I would say 40% or 30% up for us to move any drastic or for us to see any drastic change in our portfolios and also the options that we are losing so heavily. I hope I provided some value, and if you like the video, then consider subscribing and hit the like button so we can reach out to more investors. And if you like to talk about stuff like this, consider joining our Patreon and Discord. Links are in the description below. As always, an absolute pleasure to share all of this with you. Until next time, you all have a sparkling day.